What's going on, everybody? This is Coach Wade, and today I want to talk about an investment that many long-term investors use to build wealth over time. Total stock market index funds explained. Now, if you've been following this investing series, you've already heard me talk about S&P 500 index funds. Those funds invest in approximately 500 of the largest publicly traded companies in the United States. But today, I want to introduce you to something that's a little broader: the total stock market index fund. So what is it? A total stock market index fund is designed to invest in virtually the entire U.S. stock market, not just the largest companies. Instead of owning shares in approximately 500 large companies, a total stock market index fund may own shares in thousands of publicly traded companies. That includes large companies, medium-sized companies, and smaller companies. Think about it this way. Imagine you walked into a grocery store. The S&P 500 would be like shopping in one very large section of the store that contains many of the biggest and most well-known brands. A total stock market index fund is more like having access to almost the entire store. You're not just investing in the household names. You're also investing in smaller companies that may continue growing over time. Now, here's why some investors like that approach. It provides even broader diversification. Instead of owning only large companies, you're spreading your investment across businesses of many different sizes and industries. Now, let me explain something that's important. Even though a total stock market index fund owns thousands of companies, the largest companies still make up a significant portion of the fund because they're worth much more than smaller companies. So you still find companies like Apple, Microsoft, Amazon, Nvidia, and many other familiar names. The difference is you also own many medium-sized and smaller publicly traded companies that aren't part of the S&P 500. Now, here's a question I hear all the time. Coach Wade, is a total stock market index fund better than an S&P 500 index fund? The answer is neither one is automatically better. They're simply different. Both are broadly diversified. Both are designed for long-term investing, and both have been used by investors who want broad exposure to the U.S. stock market. A total stock market index fund simply casts a wider net by including companies beyond the largest 500. Now, let's talk about one of the reasons people choose index funds in general. They're simple. You don't have to spend hours trying to figure out which company might become the next big success story. You don't have to constantly buy, sell, and trade. Instead, you own a broad collection of businesses through one investment. That simplicity allows you to focus on something much more important: consistency. Because here's what I've learned. Most successful investors aren't successful because they found the perfect investment. They're successful because they stayed invested. They remained disciplined, and they continued investing year after year. And I also want to point out something. A total stock market index fund is still an investment. Its value will rise and fall with the stock market. There'll be years when your account grows, and there'll be years when it declines. That's completely normal. Investing always involves risk. Past performance doesn't guarantee future results. That's why I encourage people to think long term. Don't judge your retirement account based on what happened this week or this month or even this year. Think about where you want to be in 20, 30, or 40 years from now. That's the time frame many retirement investors are planning for. As I teach in stage 4 of the 7 stages of financial independence, the wealth building zone, once you've built your emergency fund, eliminate your consumer debt, and establish financial security, now it's time to begin consistently investing for the future. I encourage people to work toward investing 15% of the household income for retirement. One approach many long-term investors use is investing consistently in broadly diversified funds, such as total stock market index funds, as part of an overall investment strategy. Now, here's something I don't want you to miss. The biggest advantage isn't necessarily choosing between one index fund and another. The biggest advantage is developing the habit of investing consistently, month after month, year after year, whether the market is up or the market is down. Because consistency usually matters far more than trying to find the perfect investment. Here's what I want you to remember. A total stock market index fund allows you to own small pieces of thousands of companies through one investment. It gives you a broad diversification across the U.S. stock market. It's designed to follow the overall market rather than trying to outperform it. And for many long-term investors, it can serve as one part of a diversified investment portfolio. I'm Coach Wade, and I believe investing doesn't have to be complicated. You don't need to predict the future. You don't need to guess which company will be tomorrow's winner. You don't need to chase every new investment trend. You simply need a plan, a long-term mindset, the discipline to stay consistent, and the patience to let time do what it has done for generations of successful investors. Because remember, wealth isn't usually built through one great investment. It's built through thousands of good financial decisions made consistently over a lifetime. I'll see you in the next lesson.